Assalamualaikum everyone. My name is
Waalaikumsalam warahmatullahi wabarakatuh.
my name is CEO of my name is Azaherry Bin Yusri. I'm the CEO of Fashion Valet Stadium Berhad. Thank you for attending this online meeting. Okay, so then I will continue to explain about the introduction on financial ratio. Okay, the financial ratio relates amount from a company financial statement such as income statement, balance sheets, and statement of cash flow. Financial tools are important tools that help investor managers compare relationship between the accounts on the firm's financial statement. Okay, then I will explain about the purpose of financial ratios. The first one is to track company performance. For example, if debt to asset increase measure overwhelmed with debt. The second one is making comparative judgment concerning of company performance. For example, comparing on asset between companies help investors to determine which company is making the most efficient use of its assets. Okay, then I will explain about the limitation of financial ratios. The first one is future and current years could be different due to economic situation and global competitors. The comparison is useful and important with companies in the same industries. Okay, and then I will explain about the liquidity ratio. Liquidity ratio, the meaning of liquidity ratio is liquidity ratio are financial ratios that measure a firm's ability to pay both short-term and long-term obligation. The first one is current ratio, the company ability to pay short-term liabilities with current asset. The formula is current ratio, which is current asset over current liabilities. The higher is better. The second one is quick ratio, to measure a company's abilities to meet its short-term obligation with its more liquid asset. It is to measure firm ability to pay short-term obligation without depend on inventory. The third one is net working capital, difference between a company's current assets, such as account receivable, and its current liabilities, such as account payable. Okay. Then I will explain about activity ratio. The meaning of activity ratio is to determine how efficiently the business company is using its asset to maximize the profit and generate sales. The measure of how efficient the firm operation in the short term. The first one is total asset turnover, which is total asset turnover ratio, in which it shows the evidence of the company efficient use of its base asset into a one ratio. The second one is average collection period, which is allows financial managers to test the efficiency which the company is collecting credit accounts. The third one is fixed asset turnover, which focuses on equipment, property, or its fixed asset and assesses on how often the company uses the assets. And the final one is inventory turnover ratio, which is to measure how fast inventory is stocked and sold. The formula of inventory turnover ratio is cost of goods sold and also inventory. Okay, then I will pass this presentation to Faris, which is the Vice President of the Fashion Valet Stadium Berhad.
Okay, Assalamualaikum everyone.
Waalaikumsalam.
Today I want to continue the present. Can you all see my slide?
Not yet, sir.
Okay, wait. Wait. Okay, can you see?
Not yet.
Okay. So this is my slide.
Okay.
I'm Haswan bin Hamsan. I'm the Vice CEO of the Fashion Valet Stadium Berhad. Okay, today I want to continue present about leverage ratio. Leverage ratio measure the amount of capital that comes from debt. It also can be used to measure debt level. Leverage ratio include the first debt ratio. Debt ratio is a measure the amount of company assets that provide from debt. Okay, second, debt to equity ratio. Debt to equity ratio, it calculate the weight of the debt, total debt and financial liability against
Oh,
shareholder equity. Okay. The time interest spent. It shows how easily company can pay its interest expenses of payment. Okay, next is profitability ratio. Okay, profitability ratio is show a firm's ability to generate income relative to balance sheet assets, equity, revenue, and operating costs. It has five, which is gross profit margin. Profit margin compare the gross profit of the company to the net sales to show how much profit company makes after paying the goods sold. The second, operating profit margin. It compares the operating income of the firm to its sales. It to determine operating efficiency. Thirdly, the return of equity. The return of equity show the return of equity ratio show that measure how efficiently a firm to win the equity. Okay, lastly, the return on assets. It showed and measure how efficiently a company using its asset to gain equity. Okay, that's all for me. You can continue to uncheck Aiman. Okay, I stop sharing first. Wait.
yeah, sure.
Okay, wait.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mamana Aiman, Mamana Azman. I'm the financial manager for Fashion Valet Sedian Berhad. So, okay, before we start, I'm going to present my slide first. Okay. Um, okay. Can you guys see my slide?
Yes.
Okay. So now I'm going to share about the liquidity ratio for Fashion Valet within 2019 and 2020. Sorry. Okay. For the current ratio, the the total is 2.4 times in 2019, and for the year 2020 is 2.35 times, which means that the number for 2020 is lower than the number of 2019. And for the quick ratio, in the year of 2019 is 1.17 times, and for the year 2020 it is 1.15 times. So by this, the liquidity ratio for Fashion Value in 2020 is better than liquidity ratio in 2019. The current ratio and quick ratio for 2020 is lower than 2019. And also the table shows that the company are not able to pay their short-term obligation. And next is activity ratio. In activity ratio, we have fixed asset turnover and also average collection period. So by the year of 2019, for fixed asset turnover, the result is 7.29 times, and for the year of 2020 is 9.32 times, which is higher than 2019. And for the average collection period, ACP, for the year of 2019 is 70.59 days. And also for the year 2020 is 72 days, which is also higher from the year of 2019. So by this conclusion that I can give from the activity ratio is that the fixed asset turnover for Fashion Value in 2020 is higher than 2019. It shows that it is good and the company is able to manage and fully utilize their assets very well to generate sales. Furthermore, the average collection period (ACP) for Fashion Value in 2020 is higher if you compare to 2019. So by this, it shows that it is bad and the company is not efficient in collecting their debt. So next, I'm going to pass the presentation to Faris. Sorry, to Esyam Haikal.
My name is
Esyam Haikal
Esman, and
Esman,
I
and I
Vice
Vice
Financial
Financial
Manager
Manager
in Fashion
in
Valet,
Fashion Valet,
India Berhad.
India Berhad.
I want to
I
share
want to
about
share about
leverage ratio.
leverage ratio.
First is
First is
debt ratio
debt
and
ratio
time
and
interest
time
rate.
interest rate.
Like for
Like for
debt ratio,
debt ratio,
the
the
company
company
said, in year
in year
2019
2019
is lower
is
than
lower than
2020. It's an
2020. It's
increase
an
from
increase from
66.77%
66.77%
to
to 67.37%.
67.37%. For time
For time
interest earned,
interest earned,
the both of
the
the
boost
year
of the year
2019 and
2019 and
2020 is same.
2020 is
It's a
same.
four
It's a
time.
four time.
For
For
this,
this,
it show
it
the
show
for the
for the profit
leverage ratio.
leverage ratio, the
The
company
has a
has
high
a high
financial risk.
financial risk.
Because it
Because it
peaked
peaked
in year
in year
2020.
2020.
But
But
the time
the
interest
time
earned
interest
is
earned
same.
is same.
It shows
It
that the
show that
company
the
can
company
maintain
can
their
maintain their
interest payment.
interest payment.
Next,
Next,
for
for
profitability ratio.
profitability ratio.
Two
Step
is
two
net
is
profit
net
margin
profit
and
margin
return
and
on
return
asset.
on asset.
As you can
As you
see,
can see,
in year
in year
2019,
2019,
the net profit
net
margin
profit margin
is
is
3.53%,
3.53%
and
and
increased
increased
to
to 4.17%
4.7% in
in
year
the
2020.
2020.
For the
For
return on
the
asset,
return on asset,
the fashion
the
valet
fashion
India
valet
Berhad
India Berhad
get
get
5.80%,
5.80%,
and in
and in
2020
2020
the return on
the
asset
return on
is
asset is
7.09%.
7.09%.
Okay. It shows
It
the
show
company
the
able
company
to
able
control
to
the
control
firm
the firm
to get the
to
higher
get the
return,
higher return,
indicate a good
indicate a
performance.
good performance.
That's all for
That's
me.
all for me.
And
And
if that,
with that,
Thank you,
next
Esyam.
let's
presenter.
begin.
So next, we're going to proceed to Mr. Azlan.
Right. Let me open
Let
my
me open
slide
my
first.
slide first.
Yeah, sure.
Can.
So, can you see my slide? Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Azrul bin Azlan, and I am the existing shareholder for the Fashion Valet company. So, based on the explanation, the conclusion that I can make is liquidity ratio is bad and the company is not able to pay for their short-term obligation. Second is activity ratio is good and the company effectively using their asset to generate sales. While average collection period is bad and the company not collect their debt efficiently. For the leverage ratio is also bad and the company has a high financial risk. While for the time interest earned, it is remain the same and the company they are maintain their investment payment. Next is profitability ratio and it is also good and the company indicate a good performance. For the return on asset also is good and it has a good return on investment for the investor and the shareholder. So what can I conclude that is there are some good things for the company, but there is something that the company need to be improved for the next year, such as liquidity ratio, average collection period, and the leverage ratio. So next, I will do some recommendation for the first one is existing shareholder such as me. So I am recommended to remain their investment at the Fashion Valet company. While for the potential investor, I suggest them to start invest at the company. Based on the performance of the company, it clearly shows that they are generating income efficiently. So it is an opportunity for the investor and the shareholder at the company to get the return on investment. So the more you invest, company will upgrade more and get high profit from the upgrade. So when you get the high profit, it will high return also on the investment. So that's all from me. Thank you.